Good afternoon. Welcome back from our 2-week break of being online. We had things to do, people to see, and places to go. Good afternoon, Rachel.
Hello, Mr. Miller. It's great to see you.
It's great to see you. We've talked off and on over the last 2 weeks, but we both had so many things happening. And today we have a guest. And before we even introduce our guest, I'm going to read our handy dandy disclaimer here just to keep everybody happy. Welcome to the Rachel. I can try that again. Take two. Welcome to the Rachel and Mr. Miller podcast, where we cover real estate, real life, and occasionally topics that may raise an eyebrow. We are licensed residential and commercial real estate professionals. However, this podcast is for entertainment and general information purposes only. Nothing you hear should be taken as legal, financial, tax, or other professional advice. And listening to this podcast does not create a client relationship of any kind. These are our opinions, our experiences, and our conversations. Please enjoy this podcast like you would an adult beverage, and that means responsibly. Again, I'm Scott Miller, otherwise known as Miller. We have Rachel. And Rachel, would you please introduce our guest, please?
Sure, Mr. Miller. By the way, we're in season 2. This is episode 15.
Yes,
And and today we have Timothy Neal from Farmers Insurance, and he's out in my neck of the woods. Tim has known my friend and teammate and founder of Gratis Homes and Estates, Shane Haas.
Yeah.
And that is how I have come to know Tim. And so thank you, Tim, for taking some time out to chat with us today about who you are, what you do, and how you help serve the community and how we can support you and vice versa.
All right. Thank you for having me. I'm excited.
Tim, how long have you been?
Echoey. I hear was that you, Miller?
Yeah, I might have clapped.
Okay.
I can.
So,
There we go.
yeah, I clapped.
There you go.
All right.
Okay. Go ahead, Miller.
Tim, how long have you been doing the real estate game?
Well, for real estate or insurance, yeah. About 20 years
insurance.
in the insurance game, but before I got into insurance, my choice was going to be real estate. But I looked at it, my family was involved, I knew Shane, but I opted not to do it because it seemed like it was so up and down. That's not something I wanted at that point in time. So insurance, everybody needs insurance.
Well, we have news for you, Tim. It is still up and down.
Yeah. So,
You may have made the right choice in your career
wow.
path.
I don't know. Time will tell. It's only been 20 years. Yeah.
You said only 23 years, so you've been doing it for just a minute, it sounds.
Just a minute. Yeah.
What is, you know what, I got to finish this. Go ahead, Rachel, go. Your turn, go.
So Tim, you were going real estate insurance. What was it about the insurance world that made you decide that it was going to be a little less topsy-turvy than real estate?
I guess, from the standpoint, as a former business owner of a couple of restaurants, I saw the insurance side of things working in the business. And, I saw the opportunity there. I saw the opportunity to be able to help businesses, help homeowners, structure their coverage in a way that made sense. And then when it came to making a decision between insurance and real estate, I had some good friends at Farmers that were involved in the business, and I talked to them, and it just made sense at the time. I just moved back into town from Mammoth, and it was a great opportunity with Farmers Insurance, and that's where I've been ever since.
So what's the one thing people are usually surprised to learn about your job, about what you do right now? What are people surprised to know when you tell them?
I think one thing is that, I don't consider myself an insurance salesman. I think we get a bad rep, and there's the connotation of the insurance guy. We're advisors, and our day is spent, putting together packages. Each one is individual, each one is different, catered to what the insured needs. So, we are advising them on how to protect themselves and their financial future. And we're not just sitting here making phone calls, trying to sell policies, competing on price. We are providing a valuable service to the members of our community to make sure that they are financially sound. And there's something I learn something every day, something new every day in this business, and that's one of the great things about it. It's always changing, you know.
Yes.
Yeah.
Yes, it is. And I think like being an insurance agent, the same perception or misconception about real estate agents
Hmm.
is the same, where we're just salespeople.
Right.
Well, I
I agree.
actually am not a salesperson at all. Even when I was in sales,
Right. Right.
I
Exactly.
was very much of
Yeah.
indirect sales. I supported people who were the salespeople, whether that was with, HBO or Pac Bell, whichever one. It was a very indirect sales position, and it was more about being a liaison or a conduit or a connector between this entity and that. And so I've come into the real estate position feeling that with that same mindset that I am not trying to chase clients or chase a sale. I'm here to serve the community and to be a connector and to help people find the answers and to be part of that process for them, which is why I reach out to you sometimes. Hey, Tim, I've
Yeah.
got looking at this property. What does this look like for fire insurance? I think that about a month or so ago, I had somebody that lives in my neighborhood reach out to me, and I had you speak to them about what their position was with what was going on with their insurance. And so it's all about knowing people and knowing the good people and connecting those people with your community.
I agree, and that's one of the things that we pride ourselves on is that, there's a lot of change that's happened in the industry over the last few years, whether it be on the lack of available companies writing new business in California, price increases. People just want to talk. They want to understand what's going on, and we're able to tell them this is what's going on. This is what's happening with your company. We can tell them that you're good where you are, make adjustments here. But yeah, it doesn't matter whether they're a client of ours or not. We're still here to provide a service and answers for anybody that calls, because
Hey,
everybody has questions.
Tim, you just mentioned something, and I keep hearing uh, different answers on it. You mentioned the change. Well, obviously, you mentioned the changes in California. At one point, there was a bunch of companies that were not writing in California any longer.
Yeah,
Have
exactly.
those? Have some of those companies decided to come back, or are they still saying, "I'm out"? What's I'm going to say your opinion on what's happening in that realm?
No, that's a really good question, and I get every day somebody asks me that question. And truth be told, there are several companies that have stopped writing. State Farm does not write any new home business. Liberty stopped. Nationwide pulled out. Allstate's not writing. There are many companies that have pulled back. We've written through the entire period at Farmers. We changed our underwriting guidelines to reduce the number of policies that we were bringing in, but we never stopped writing. And one of the things that we need the companies to come back. We need State Farm. We need Nationwide, Liberty. We need them all to start writing. And that's the goal of the Department of Insurance at this point through their sustainable insurance strategy. And for that to work, they're telling the companies, the admitted carriers, that look, come back into California, and if you want rate increases, you need to write a certain percentage of your home insurance policies, new business, in high risk wildfire areas. So that's the trade off. It's a give and take. If they want to come back, if they're going to come back, they need to write in these areas so that the fair plan, that's a whole another topic, but so they're not so overloaded and overburdened financially. Yeah, there's a lot going on.
Oh, and I used to know the name of it. I'm going to blame this on not being hydrated enough today, which is
It
my
is
bad.
rich, it gets dry up there.
Uh,
Yeah.
there was something, and again, I apologize for not remembering exactly what it was, but it was something about California and only California having some, and I'm going to say law that was preventing or making insurance companies use old data versus what you know what I'm saying? Is that
I
what
do.
I'm
Yeah,
what
I
is
do. It is.
remind me what that was called, and is that still the thing that I can't remember? Is that still an issue?
It's in transition actually. What insurance companies were allowed to do in the past, they were allowed to look at past loss results to predict future, losses and to set their rates. And I think we could go back, I think it was 20 years that you could go back and then use that as a projection. But with climate change, the insurance companies have argued that we need to do catastrophic modeling. We need to be able to predict based upon what the catastrophic models tell us about the weather events that are coming down the road. And as we've seen, with the weather changing, I mean, the wildfires the wildfire risk has increased. In California in the wintertime, you can have major flash flooding, major.
I know nothing about flash flooding up here.
Oh, you do, yeah, up there. And the Department of Insurance has said, okay, yeah, you can use the catastrophic modeling, but that's still part of the sustainable strategy is you guys can use all of this to justify your rate increases, but we're not going to give you the rate increases that you're looking for unless you're going to agree to write a certain percentage of your policies in high-risk areas. And I think we have started doing that. There are areas where we'll write that are much higher risk than where we would have written before. So it's starting. It's a slow process, but it's starting.
This question may be out of all of our wheelhouses, so feel free to say, yes, Scott, it's out of my wheelhouse. And we hear that insurance companies raise their rates. And then when it comes time for, hey, how is this insurance company doing? It shows they've made more money than they've ever made in their lives or in their company's history, but yet they've raised their insurance rates and priced a lot of people just simply out of the market, even people that have owned their own homes. I have a strong opinion of that, and I own a small business outside of real estate, and to me it kind of feels like they just want to keep their same quality of life and raise their prices to keep their same quality of life. Thus, it's increasing the rates on the everyday person. If that made any sense, it made sense in my head, but
yeah, it does. It makes sense. That perception or that makes sense, and that seems to be the prevailing thought out there as far as the insurance companies goes. But I'll tell you, with farmers, when we came out of COVID, we had the supply chain issue. Well, it's a whole thing, but the cost to rebuild has gone through the roof. The cost to repair and replace cars has gone through the roof. The number of catastrophic claims or catastrophic events that the companies are dealing with went through the roof, whether it be wildfire, flood, or you name it. We were getting slammed. Companies were getting slammed heavily, and we lost a lot of money. Let's see here. We paid out in claims, and the other companies too, in 5 years between the Thomas, Woolsey, and then you got the Palisades and the Eaton fires, more money in those years than we had probably made in the last 15 or 20 years. So we were catching up. Now, the other component to that is that we have reinsurers. Farmers has a company that reinsures their book of business. What
does that mean when you say reinsure? So after a catastrophic loss?
The reinsurer will look at farmers' book of business, let's say spread over California. They will reinsure our book, meaning that if there's a catastrophic wildfire, and let's say there are 500 million in losses in this event, Farmers is not cutting a check for 500 million. We're cutting a check for whatever our deductible is. The reinsurers are the ones that are cutting that check because we pay money to have that book insured.
So insurance company has an insurance company?
Yes.
You took the words right out of my mouth, Rachel.
That's exactly it. And reinsurance rates skyrocketed over the last few years.
Wow.
They've come down now, but that's another reason that companies have raised their prices. And that's why the other companies, State Farm, et cetera, got out, because they could not make money writing policies with the existing rate structure. So that's why they left. We didn't leave. We kept writing, but we raised rates. We tightened up underwriting so that we could survive. And our CEO, Raul Vargas, did a tremendous job coming in here 4 years ago and really turning around the company. Now, people they ask too, are prices done increasing? No, they're not. Unfortunately, if you look at a state like Texas or somewhere in the Midwest, you look at what it costs on a per foot basis to insure a home, we're still way below what other states are when it costs, cost per square foot.
I have a suspicion as you were saying this was running through my head is I'm going to say a lot of people, and myself included, I'm going to use the word that don't think I've used in 25 years, but we get kind of myopic, is we look at only where we are at and what we see. You just mentioned the fires in Los Angeles.
Right.
However, we are not in Florida, so we don't see the hurricane stuff. We see it on the news and stuff like that, but it does not typically directly influence us or impact us, rather. So we're seeing it myopically. Well, I used it twice in one paragraph. I think I'm wondering if that has a lot to do with it, when myself included, as an insurance payer, like, man, my insurance rates went up again. Why is it going up so much? I wasn't anywhere near the LA fires. However, because it's one company covering everything,
Yeah.
so that actually makes sense.
And well, and I do agree with that though. It'll all shake out, but there are people there are people in low fire risk areas that are paying more than they should be at this point in time, and it needs to be balanced out. They need to adjust the rates, and they will, and they have, on the homes that are in Mulholland, in the Canyon, in Malibu. They're the ones that need to pay the premiums for the risk because they've built their homes or bought homes in the what they call the wildland urban interface areas, and yeah, so that's an issue too.
Are you?
Can,
Go
go
ahead.
ahead, Miller.
No, your turn. I talked.
I'm wondering if we can kind of segue into um, the real estate landscape when real estate agents are working with buyers and sellers, and these are going to be actually two different conversations with the same question. So, how can we educate and prepare our buyers as they start looking for the home that they want to purchase? Insurance has to be like one of the top three things that we discuss right off the bat because it affects affordability. How can we prepare and support our buyers around this subject?
I think you hit the nail on the head as far as it being one of the top three, things that you talk about. It should probably be number one because when you're talking about the way the rates have increased or what the rates have done over the last few years, and you look at the wildfire risk in this area, people, when they're looking for a home, especially first-time home buyers, will be absolutely shocked to see what the premium is if they're able to get a standard or admitted policies. With all the real estate agents that I work with, I tell them, if you've got a buyer, you're out looking at a property, give me a call. I'll rate it out really quick, let you know what the premium is going to be so that you can have that conversation with your client. Because that, when I first started, insurance was like a last day thing. It's like, oh my God, we need the insurance, you get it, and you get it done. Now it'll blow your debt to income ratio out of the water if you don't.
It's really made
Yeah.
it's really made things really difficult, as if we didn't have enough hurdles
Yeah.
to jump over. But I am going to start working with a buyer, I believe, within the next 2 weeks. And so I will definitely, and they are first time home buyers. I will be sure you'll be hearing from me a lot, Tim.
Okay, well, that's good. Yes,
Yeah.
yeah. We have
And
a.
then the same question on a seller's side, what can a seller do to help make the home that they are trying to sell
Yeah.
be more accessible, more affordable, and what kind of information should they share with potential buyers?
I think there are a few things that a seller can do. One is to be completely transparent, one about any claims that they've had, their claims history, because it'll come out. That's another thing too, because it will come out when you're looking for insurance or the buyer's looking for insurance. Claims will pop up that are on the seller, but they're on that home and they affect the ability of that home buyer to buy that or to get that policy. That's one thing.
Hey Tim, before you go further, why is that? I know what you just said, that if the home has a claim, say it was a flood, say the toilet overflowed, and they had a claim on that, and then my buyer comes in who's new to the home, never had a claim in any of his or her homes in the previous, and that toilet overflowed has been repaired. However, that does directly affect the insurability. Is there an easy answer to that, or is that more convoluted than I think it is?
It is, but it's not. There is no simple answer, but it's one of those where I say, well, it depends. There are cases where if there is a claim, let's say there was a water event, and it was 3 or 4 years ago, it's affecting their ability to get a policy. If the seller has proof that that has been remediated, that the claim was paid out, and that money was used to repair that issue, then we may be able to mitigate that problem. So
Okay, good.
it's one of those, it just depends. The other thing that affects that process is if the buyer has a claim on a residence that they own. If so, the insurance companies look at that people that file claims as a bigger risk than ones that haven't in the past. And whether that's fair or not, I don't know. I don't think it's completely fair, but it depends.
That also goes back to just went out of my head. FICO or not, credit scores is if there's a lower credit score, there could be a higher insurance policy.
Yeah, and I'm very happy that we don't credit score in California, and that would not be good.
It is a little peculiar that we, as consumers, we pay for the coverage, and then when we use the coverage, we get
Slapped
for using the coverage.
Yeah, well, yeah. There's two, I think, good points on that. Is we're in an environment now where the consumer, the insured, we need to take on more of the risk as homeowners. If we want lower premiums, we need to take on more of the risk and raise our deductibles to points where we may have not been comfortable in the past, whether it be 10,000, 15,000.
Just hope for the best, right?
Because you don't want to file those small claims at $5,000-$10,000. You really got to think about whether or not you want to file that claim because it's going to affect you down the road. Another key thing is don't even inquire to your insurance company about whether or not you should file a claim because that will impact your claim history. It will show that there's been an inquiry, even though it shows zero paid out. Companies will want to know whether or not that damage was repaired, what did you do about it, etc. It opens up a can of worms. So you want to make sure that, you talk to your agent first before you talk to the company because your agent will tell you whether or not you should be going down the claim road or not. And I usually have that discussion when I bring a new client on. Back to the seller, as far as, wildfire hardening has become a big, topic now. A seller that's in a risky area, if they're willing to, they could box the eaves, which will discount your fire insurance policies. They mesh the gutters, mesh the vents, make sure that there's no opening where embers can fly in a wildfire because that's what happens in these wildfires. It's the embers.
I was just watching something with the fire department about fire hardening. That's a big thing we have over at Epic is talking about fire hardening.
Yeah.
And even like the cool flower beds that are right up next to the house.
Yeah.
Those should not be mulch. Those should be rocks.
Yeah. Yes.
So that if an ember does hit there, it doesn't make the house go poof.
No,
I just had a conversation with a seller yesterday about that. And it kind of goes back to one of my other questions from earlier. Is that's something that insurance companies are going to look at? Are they going to look at fire hardening in an area that's not a fire risk? I assume they would. 'Cause I know I would, but
that's a good question because they haven't completely figured out the full discount structure on all the wildfire hardening, etc. But if you're in a non-wildfire area, not zone,
where's that?
yeah, here nowhere. Now after Palisades, we realized that nobody's safe. It probably wouldn't be as I wouldn't want to put a lot of money into it if I wasn't in an area that was extremely risky. Although I would mesh my gutters and mesh my vents. There's no reason to not do that. It's cheap.
And I think right next to the house, like I was talking to my seller, I said, let's put some red lava rock here. And he goes, well, I can just put mulch. I'm like, no, do not put mulch. And he asked me why. And I'm like, here, watch this video. And I
Yeah. You want to keep
something.
a
Oh, it's in my
5 foot
glasses.
barrier.
Tim,
Yes.
aside from previous claims from either the buyer or the seller, are there any other things that come to mind that could delay or cause a denial of insurance coverage?
That's a good question too. A delay or denial of coverage, that, in my experience, the only thing that would delay coverage is if we need to do an investigation on prior claims, get
Okay.
information on prior claims. It's usually a fairly straightforward process on the front end as far as getting the policy. Even if it's in a high wildfire area, we can always, do a fair plan with a supplemental policy. Or there are other companies out there that'll write your standard full homeowner's policy per se. So from the front or from before the purchase, there's not a lot that would, you know, prevent you or shouldn't be any hiccups once you have all the information, I guess is what I'm trying to say. You know.
For the California Fair Plan, I want to spend maybe we spend like another minute talking about that before we do our
Sure,
rapid fire questions.
sure.
Because look, we're
Yeah.
already. See, I told you it
No
goes
way.
fast. Didn't
No
I
way.
tell you it
No
goes
way. No way.
fast?
Yeah. Let's do it again.
Oh, California Fair Plan.
Yeah.
Um, is it working?
Well, is it working?
Is
That's
it doing what it's supposed to do?
It's doing what it's supposed to do, although it's doing it very slowly in the Palisades area, the Eaton area. I mean, it's doing what it's supposed to do from the standpoint of providing a market for clients that can't find coverage elsewhere.
Where is it getting its funding, or what insurance company is covering them? Who's got their butt?
Um, we all do.
Oh,
And yeah,
Goody.
all of the admitted carriers, State Farm, all the companies in California pony up to cover the FAIR plan based upon the percentage of homeowners business that they write in California.
but okay, why? Why can't you just keep your coverage under your business, your company name, and proceed accordingly? Why are they pulling and creating another bucket? They meaning California.
Because the companies don't want the direct risk of that. They'd rather be the backstop and have this outlet because for them to take those policies on, it would be so expensive for the insured. One, they wouldn't be able to do it. And two, our reinsurance companies would say no. They wouldn't want us to take those risks on
Okay,
because it's too risky
so
for them.
I see it as
Yeah,
kind of like
yeah.
it's a donation. It's a donation to the same cause. So you can say, here we are participating, and we have no liability.
And we get to recoup 60% of that payment to the fair plan that we just the companies as a whole cut a check for $1 billion after the Eaton and Palisades fires. And the DOI has said that we can recoup, I believe it's up to 60% of that payment from you as the consumer, from me as the consumer. You'll see on your next insurance bill, or you probably
Just,
already have, there's a
just
fair plan surcharge on there.
say that
Okay?
again.
So look for that. So
Say
that
that
even
again.
reduces our risk further as a company. It's not a perfect system. We don't want the fair plan to take on all this business. We would rather write it, but we need to
Right.
be able to, it's a work in progress.
Was a fair plan created to stay in existence, or is it a temporary thing that's going to go away?
No, it was created to stay in existence, but it wasn't created to handle this much business.
Okay.
Because technically it's insolvent right now overall, if you look at the possible potential liability. If Big Bear were to have an event, it would be sunk again and we'd be cutting more checks.
Question. I was under the impression that the California Fair Plan was created after our catastrophes, but it existed prior?
It's been around as long as I've been doing business. I've been
Oh,
here
well, look at
doing
me
it
now
20
That
years.
on these
I
things.
didn't
Yeah.
know that. I thought
No.
it was a COVID thing.
Oh
Okay.
no. Oh no. It's been around for a long time. You just never heard about it because we didn't write any policies through it. It was
Wow.
They really were the insurer of last resort. I mean, we used to write policies on the tips of matches. We didn't care as an industry, but then climate change, everything else, it came back to bite us.
That's fascinating.
Yeah,
So we're going to do
sure.
what do you call it? A fast,
Rapid fire.
rapid fire. I have five
Well,
questions for you.
Yeah,
Go ahead.
leave out the first one because we kind of just talked about that, Miller.
I think I didn't send you this one. Ha! But
Miller.
I know. Okay. I'll just do rapid fire. And Tim, these are yes, no questions.
all right.
However, I'm going to put in here, they're yes, no with an asterisk. I realize that some of these may be yes, however. So,
But
yeah, yes, however, no. So,
Okay.
and I'm going to go see if this works. Wait, ready? And it didn't. Wait, try it one more time. Oh, look, it worked. Yay!
okay, wow.
Okay.
Business.
Can insurance problems delay or even kill a home sale?
Yes.
Should a buyer check insurance options before removing contingencies?
Yes.
Can an older roof make a home harder and more expensive to insure?
Yes.
I want to know. Is the cheapest insurance policy always the best choice?
Never.
Not just no, but never. Should homeowners review their insurance policies at least every 5 years?
At least annually. No. Sorry.
That's
So,
okay.
no.
Annually is good.
Annually is good. Look at that. You just bang that out. Bam.
Woo!
Look at that.
Where's your applause button?
Oh, well, yeah, because it wasn't working the way I wanted it to. Wait, here it is. I found it. And look at. Wait, turn up the volume. And now. Yeah, it didn't work. See, sometimes it works and. Yeah, yay! Yeah. Uh, Tim, what is the best way for somebody to reach out to you and say, Tim, we heard you on the Rachel, I can really speak well today, Rachel and Miller podcast. What's the best way for someone to reach out to you and say, hey, Tim, what's up?
Can I give a phone number?
You can.
Yes.
All right. Call me at the office at 805-273-7124 and then say that Rachel sent you.
That's right.
What am I, chopped liver?
Rachel's guy. Rachel's guy.
Yes.
Tim, do you have a Facebook or a website also that they could go to?
I have a Facebook page. It's under, oh gosh, is it, I have, Instagram under
Okay.
Tim Neal or Tim Neal Agency. So follow me on Instagram.
Okay.
And my Facebook page is, I think it might be Timothy Neal Insurance. But I'm there. Just put in Timothy Neal, you'll find me.
And
We
I actually
will
have,
find you.
I can't read it.
Tim, what's your phone number again?
805-273-7124. And Facebook is Timothy Neal Insurance Agency, Farmers Insurance.
Got it. And Miss Rachel, that I can't keep mispronouncing your name, best way for someone to reach out to you is
Rachel the Wescally Webbit. My phone number, the Wescally Webbit. Rachel Miller. Rachel Waweno.
What is going on?
813-0664 is my phone number. My email address is rachel@gratishomes.com, and you can check out my website, rachelmarino.gratishomes.com. Mr. Miller, how can people get a hold of you?
they can get a hold of me. My phone number is 760-264-3501, 760-264-3501. And you can find me at homeswithscottkmiller.com on pretty much all the socials. Something we forgot to mention is, and we usually mention this earlier in the broadcast, is Rachel and I are at two different agencies. She's at Gratis Homes, and I am at Epic Realty. And we also do this live, and as you can tell, we don't edit things out. So that is something that we do unique with our podcast, is we go live, and when things happen, they just happen. Tim, it is an absolute pleasure meeting you. I really appreciate you being on the show today. Don't hang up yet. We want to talk to you a little bit in the green room, and we will talk very soon. And I don't think Rachel's going to be reaching out to you with her client that she has coming in the next week or so. So with that, and also we will be back next week. We did take a 2-week hiatus, because we can. So I'm Scott Miller, otherwise known as Miller, and Rachel and we will see. You will see us. We can't see you unless you happen to call in.
Say, Melly.
Yes.
Thanks,
Yeah.
Tim. Hang tight.
Thank you. Thanks,
Very
guys. I
good.
appreciate it.
Thanks, everybody. We'll talk soon.
Bye.